This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Saudi Arabia and the United Arab Emirates have reached a compromise over OPEC Plus policy, an OPEC Plus source said on Wednesday, in a move that should unlock a deal to supply more crude to a tight oil market and cool soaring prices. Brent oil prices fell on the news by as much as $1 per barrel towards $75 per barrel after Reuters reported the two major OPEC producers had agreed a deal. In a statement on Wednesday, the UAE Energy Ministry said that a deal with OPEC Plus on its baseline is yet to be reached and that deliberations are continuing.
The European Union on Wednesday proposed an effective ban on the sale of new petrol and diesel cars from 2035, aiming to speed up the switch to zero-emission electric vehicles, EVs, as part of a broad package of measures to combat global warming. The EU executive, the European Commission, proposed a 55% cut in CO2 emissions from cars by 2030 versus 2021 levels, much higher than the existing target of a 37.5% reduction by then. It also proposed a 100% cut in CO2 emissions by 2035, which would make it impossible to sell new fossil fuel-powered vehicles in the 27-country bloc.
Moving on to the top news in the energy sector.
Oil prices dropped on Wednesday after Reuters reported Saudi Arabia and the United Arab Emirates had reached a compromise that should unlock an OPEC Plus deal to boost global oil supplies as the world recovers from the coronavirus pandemic. The benchmarks extended their losses after government data showed implied U.S. gasoline demand declining considerably last week. While the U.S. Energy Information Administration said crude stockpiles declined more than expected, in their eighth consecutive draw, the drawdown was overshadowed by lagging gasoline demand. After last week's emphatic print, implied gasoline demand has dropped off considerably, resulting in a build to gasoline inventories, said Matt Smith, Director of Commodity Research at Clipper Data.
South Africa's petroleum industry body SAPIA said on Wednesday supplies of petroleum products are currently stable after the country's main refinery in Durban shut down due to widespread looting. SAPIA is actively engaging with the government to ensure that adequate supply to the market is maintained, the South African Petroleum Industry Association said in a statement. SAPIA represents major refinery operators such as BP and Shell in Africa's most advanced economy, which is a net importer of petroleum products.
Next, we have the top news in metal markets.
Southwest China's Yunnan province has started asking some local metal producers to reduce power consumption for the second time in 3 months, two industry sources and consultancy Aladani said on Wednesday. Zinc and tin smelters in Yunnan have received notices asking them to reduce power use by 25%, Aladani said in a note, adding that aluminium producers were not affected as they are still operating at lower rates due to earlier curbs. Yunnan, whose abundant hydropower resources have seen it become a hub for energy-intensive metal production, restricted smelters' power use in May after a severe drought, sending zinc, tin and aluminium output lower.
An audit of China's central budget in 2020 found signs of commodities being illegally resold for profit, the government said, as Beijing continues a campaign to root out activity it believes is driving up manufacturers' raw material costs. The audit, which looked at implementation of the budget, as well as other fiscal expenditure and state asset management, also uncovered signs of tax evasion, the government said in a statement on its website on Wednesday. These problems disrupted normal market order and fair competition, said the statement, issued after a regular meeting of the State Council, China's cabinet, chaired by Premier Li Keqiang. We will now look at the top news in the agricultural sector. Germany's 2021 wheat harvest of all types will increase 3.2% on the year to 22.80 million tons. Although some crops have suffered from a recent heatwave, the country's Association of Farm Cooperatives said on Wednesday. The association forecast Germany's 2021 winter rapeseed crop will rise 4.7% from last summer's crop to 3.68 million tons. The wheat harvest was down from the 22.98 million tons forecast by the association in June, but rapeseed was up from the 3.67 million tons in the June forecast.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.